Hi, and welcome to our On Point webinar, Unlock Market Opportunities, Strategies for Growth and Funding. I am Bridget Haidt, host and moderator for Oak Street Funding webinars and podcasts. Today, I am delighted to have Alicia Chandler, president of Oak Street Funding, and we are welcoming back Marc Chandler, chief market strategist at Bannockburn Global Forex, an Oak Street Funding affiliate company through our parent company, First Financial Bank. Today, they are going to discuss the 2024 current macroeconomic environment, managing a business in 2024, and strategies to fund your growth while managing your cash flow. So Alicia, Marc, thank you so much for joining me.
Thanks for having us.
No, sure. No, thanks.
Well, to start off, Marc, can you walk us through the current economic updates and then discuss what are some key economic factors such as inflation or interest rates that are most likely to impact businesses in Q2 for 2024?
Yeah, sure. So, I think that broadly speaking, it's been a challenging time between the COVID, the pandemic, the recovery from the pandemic, Russia's invasion of Ukraine, the try to de-risk from China. So it's been a very challenging environment for businesses. The Federal Reserve seems to be done with its monetary tightening cycle that began in March 2022 and probably finished somewhere around the middle of last year. I think many of us are expecting a rate cut, and now it's a question of sort of how soon and by how much. At the end of last year, as often is the case, the market went excessive. So that pendulum of market sentiment swung very hard towards very aggressive Fed cuts. And this weighed on interest rates and the dollar in Q4, even though the stock market did well. Here, as we begin 2024, the market has corrected. That is to say, the market has once again converged with the Federal Reserve. In December, the Fed said that their median out of the Fed officials looked for 3 rate cuts this year. At the end of last year, the market was pricing in almost 7 cuts. But between the Federal Reserve official comment and the economic data, the pendulum has swung back, and once again, the market has converged with the Fed. When will the first cut be? It looks now that the market's thinking somewhere around the middle of the year.
Okay.
But it's still a challenging environment. Economic growth is likely to slow sharply this year from, call it above, say, 2.5%, 3% in the second half of last year. And the Federal Reserve says trend growth. And by that, they mean the pace of growth that's non-inflationary. It's about 1.8%. And it looks like we're going to grow above that or near that in Q1 before a more genuine slowdown takes place later this year.
Okay. Does that take us all the way up to 12 to 18 months? Do you see any current interest rate projections for the next 12 to 18 months?
Yeah, I think that we should be expecting lower interest rates for the Federal Reserve to begin cutting interest rates. At first, the cuts will be to really maintain the real interest rate. What happens is the Fed wants to look at interest rates excluding inflation. That is the real weight or the real impact of interest rates on the economy once adjusted for inflation. And so this easing cycle that's likely to begin, say, somewhere around the middle of this year is likely to run through most of next year as the economy slows. But, this is also the 4th year of a presidential cycle in the U.S., and there's a couple of regularities. One is that very rarely does the economy have a recession. That is, very rarely does the economy contract in the 4th year of a presidential term. And also, very rarely does the stock market weaken on a year-over-year basis in the 4th year of a presidential term. So for investors, this means lower interest rates, probably higher equity prices, but the economy avoids a recession this year. Often that downturn takes place early in the next president's administration.
Interesting. So should business owners wait until the rates are lower to seek acquisition opportunities?
Well, we're seeing more acquisition opportunities now from our clients at Bannockburn, off to a strong start this year. It's not just the interest rate, but being able to find companies that are, say, below real value by the different companies' models. They want to buy undervalued assets. And we're also seeing a lot more U.S. interest in foreign acquisitions in Europe and Japan, partly because of the strength of the U.S. dollar.
Okay. Alicia, do you have anything to add to that?
In this type of environment, I think it's incumbent upon business owners in the industries that we serve in the advisory space, insurance, and CPA world. Now is the time to just take a look at what's out there.
Okay.
And it's not a time to stop. You need to continue to look. What are the other opportunities? Maybe it's a time to sit down and take a look at your business plan that you have together and your projections and see if those need to be updated or changed.
Okay.
So I think it's definitely not a time to stop. It's a good time to reassess and prepare for the future and take a look at what's out there in the market.
Okay, great. So Alicia, how do you think businesses can be prepared to serve their clients during this time?
So I think one of the biggest things for those industries is to assist your clients with preparing for the future. So listening to things like Mark was just talking about with the economic forecast, depending on the particular service that they're providing, they can help their clients prepare, for their future, tax planning strategies, family wealth planning. Are there any of those types of changes in connection with the economic forecast that they need to go out and take a look at their clients' portfolios and advise their clients at this time?
Okay, Mark, do you have anything to add to that?
Yeah, I would just think that one thing I see that businesses are challenged to do, but it's incumbent upon about doing it, and that is to align the business interests with the customer's interests, as opposed to being pulling in opposite directions. I think that in this kind of climate and in the environment that we're in, that having this alignment of interest is really like conducive for both sides, and it avoids this sort of the competition where sometimes we see some U.S. banks might be competing with their clients to buy assets, and that's not. I think that becomes a challenge, but I think that building trust between the clients and is really about having a common goal and having aligned interests. I think that's what we need to do, broadly speaking, align our interests, align business interests with their largest customers' interests.
Great. So, Alicia, what kind of deal activity are you seeing in 2024 compared to 2023?
So actually, the first month here, we've seen a lot of activity and interest and closed quite a few deals already.
Okay.
The thing is, valuations in the advisor space and as well as insurance and now CPA continue to rise. We've not seen valuations drop off. So there still is that buyer-seller need that's out there. When it comes to what we're seeing in deal activity, a lot of it today is succession planning.
Oh, right. Okay.
So maybe not just acquisition activity of one firm buying another, but more for succession planning. We have these, the folks in the industry that maybe the average age is about 60, 62 at this time. And so those are the people that are continuing to look for opportunities to figure out, should someone internally take over for me, or should I sell to a competitor or a friendly competitor, so that, my clients can be taken care of in the future. So we continue to see that very heavily in today's market.
Okay, time to retire. Enjoy
the fruits of their labor.
Yep. Okay, this is a little bit of a big one. So when considering an uncertain market, what defensive strategies can RIAs, CPAs, and insurance professionals recommend to their clients to mitigate risk? And Alicia, I'll start with you, and then Mark, I'll go on to you afterwards. What do you think?
So I think, and I constantly say this, plan. So help your clients plan. Help them mitigate the risk. If you think about those industries, they're all insurance. They're there to help you avoid risk by, issuing you policies to protect you if something goes wrong. CPAs, taking care of your money, helping you with tax strategies. The RIA industry, help you with your portfolio to grow wealth. So plan with them, plan for themselves. Keep up with economic factors. Help your clients to understand what's going on, to help them not to panic, and help them understand that, as Mark was talking, here's what things look like over the next 10, 12, 16, 18 months, however long that, you may need to look out, but just to help them get comfortable and continue to move forward without fear in this market.
Okay. Mark, do you have anything to add to that?
Well, I think that, we live in such an uncertain world, and there are risks that businesses can't protect themselves from. Interest rate risk, currency risk, commodity risk. But there are risks that we can't control. What Russia does in Ukraine, how China responds to something. But I think those risks that we can manage, we ought to manage. I think we owe it to ourselves, our investors, our shareholders, as Alicia was saying, to manage the risks that we can manage. And some of them, I think this is one of the interesting things that have happened in the capital markets in the last 20 years or so. They become more democratic in the sense that it used to be that only large asset managers, large companies can have access to some of these products that allow companies to mitigate or hedge their risk. And now these products are available even to small and medium-sized businesses. I think it's important to use what is out there and to realize that what's out there is changing, evolving. And some of these tools, like I say, that we used to be used only by large multinational companies or the largest asset managers in the world to protect themselves from currency risk or interest rate risk, are now available to small and medium-sized businesses.
Great, thanks for that. So, Alicia, do you have any specific strategies for business owners on how to mitigate risk for their own business and take care of their employees?
So I think one of the biggest things that we continue to see over and over in the advisor space and the CPA space, as well as insurance, is just the failure to have a well thought out succession plan. Okay. Now, and that can protect both the business and the employees, because typically what we're seeing is that these firms have employees that they want to take over the business, but they've not either documented that plan or had the honest conversation with their staff or their employees about that. If you don't have the open and honest communication, then no one understands what the expectations are. And people may get nervous thinking, well, if, so-and-so leaves, where does that leave me?
Right.
If you don't have that conversation about, I would like you to start learning the business management and take over eventually, then that leaves a big hole. So I think that's one of the biggest things that people can do to mitigate risk is to talk about succession planning.
Okay. How about you, Mark? How do they mitigate risk, economic risk for business owners?
Well, I think that we work hard with our clients to try to help identify what they're exposed to. For example, since the Federal Reserve has been raising interest rates, a lot of small and medium-sized businesses have tried to move from floating rate obligations to fixed rate obligations. Now that the Federal Reserve is going to likely begin cutting rates shortly, they need to move the other direction. Give up the fixed interest rates and move back to floating rates to benefit from a lower interest rate environment. So I think that, to Alicia's point, I think it's to be tactical, to stay on top of the developments in the economy, to adjust policy accordingly. And again, it's really seeing those risks, whether it's interest rate risk, commodity risk, or the exchange rate risk. But I think also, you raise a question about employees, and I think that this is a real challenge for a lot of U.S. businesses, where so much is left to the individual. I think about like our retirement plans. Many businesses have 401k plans as opposed to the fixed contribution. The defined contribution plans as opposed to the defined benefit. And so this forces us as individuals to have a greater responsibility for our own retirement money in a way it wasn't the case for, say, our parents' generation. And I think that businesses often forget, we get so caught up, I think, in products and prices and mitigating these risks, we forget that the real value of a company is the human capital, what they call human capital, right? That's the people I often think about that. Working at a bank and seeing people, a crowded elevator leave, and knowing there goes the bank's human capital. I think businesses often think that workers, employees can be replaced. And of course, we can be replaced, but at a cost. And I think that strengthening employer and employee relationships is really a key to strong, sustained business activity.
Great. Thanks for that, Mark. So how can business owners effectively communicate these topics, trends, potential risks, and tips to their clients? Alicia, do you have anything there?
That's a great question. I think the answer will depend on what industry you're in.
Okay.
It starts by understanding how your client wants to receive that information.
Okay.
Interestingly, we were talking to two different types of clients last week. One said, well, my clients are on Facebook. Another said, my clients are on LinkedIn and maybe X. So it depends on your audience, first of all, where your clients want the information to be communicated. And then thinking about how you will communicate to them. So do they like to also talk on the phone? Do they want you to call them? Would they like an email? Would they like a webinar, a podcast to listen to? So it's really incumbent upon the particular business to just understand their client and what is the best and most effective way of communication to get these topics out.
Okay. And then Mark, do you have anything to add to that?
And I agree. I mean, knowing your client is so important in these kinds of issues. I think also it's important that, I think we all want to feel like we're special. Especially right?
So true.
I think how to convey that to a client, that they're just not a number, they're just not a sales revenue figure to help you meet your target, but they're showing a genuine understanding of a client's interests and their desires. Like Alicia was saying, not only how they want to be communicated, but like when. And also remembering that these people who are on the other side of the phone call or the internet or whoever we're dealing with are real people with families and other issues, other interests besides just the business. And I think that what we find from various walks of life, that embracing people as a whole and not just having to segment them. I'm only interested in you because you're buying my goods, but really broaden that to really be interested in them as people. I think that genuineness goes a long way these days.
For sure. Okay, thanks for that. So given all that we've talked about, advisors, CPAs, and insurance agents are tasked with being valuable sources of information and support. So how can someone position themselves as a trusted advisor and offer value beyond the traditional services? Alicia, what do you think?
Bridget, I think this goes back to just what Mark was talking about. It's to understand your client as a whole person, not just the business partner or the business aspect. So it's talking to them and understanding what they really need. Mm-hmm. So for example, if you're a wealth advisor, so I was looking at a study the other week from someone that I follow on LinkedIn, and the numbers were showing that not only do their clients want the portfolio assistance and helping with the wealth management, but they might need legal advice, how to set up a family trust, maybe some other, business information that they might need help setting up from a legal perspective. And they also might need help with like philanthropy or tax advice. So looking at the holistic needs of your client and not just that one specific aspect.
Right. How about you, Mark? What do you think?
I agree. I think that oftentimes, so many of the frontline important workers are engaged in the sales process that we forget about that what we really want of sustaining clients is really about sustaining that long-term relationship. So yes, of course, we're interested in a particular transaction. And that's how we make our money. But in the long run, it's really building and sustaining strong relationships. I think that becomes the key, and make it clear that it's not just this transaction that we're interested in, but we're really interested in developing the relationship. In the long run, it gives you a greater share of the wallet, become a trusted advisor, have greater influence. And I think those things are what pays off in the long run, even though, of course, we need to feed ourselves and the individual transaction is important. But in the long run, it's a sustained working relationship.
Okay. So what tools and resources are available to professionals in each industry to stay up to date on the latest economic trends and developments and better serve the clients in Q2 2024? Mark, I'll start with you.
Yeah, I spend my days thinking about information, packaging information, writing about it. Of course, the internet is full of great sources.
Sure.
I think that if I had to compare something, I'd say that maybe what we're going through now is similar to what happened just as the cell phone emerged, whether it's with AI. I know that there's a lot of commercially available AI, and I think I use something with AI almost every day.
Really?
I mean, even for fact checking, of course, not for writing, but for fact checking, for getting answers quickly. It's like, I think, in some ways it's an evolution, right? We went from say a word, a document, to now it can correct spelling, now it can correct grammar, now it can correct style. And I think that's the same thing with the search engine. We used to say, show me X or something like that. And now it's so much more detailed. So I'd say you could, for facts, for finding sources. I think the internet is chock full of things, but I point out to two that could be very valuable for businesses as you think about through where we are in the economy, what the Federal Reserve may do. The first is the CME, that's the Chicago Mercantile Exchange. They trade Fed funds futures, which is really the overnight rate that banks charge each other. And it gives a very good guide to what the market is expecting for Fed policy. CME's Fed Watch is a very useful page. I use it almost every day to try to figure out what the market thinks about Fed policy, and that's the interest rate policy going forward. For growth, the market keeps evolving, and I know that any one economist's views aren't so important. What matters is a collective, is what's pricing into the market. What does the market, or what does the world, if you will, expect? And there's a new approach as well. The Atlanta Federal Reserve, for example, rather than approach the economy from a economist perspective of trying to forecast, they do it more like an accountant would. As the data comes in, they say, what's the economy tracking? You can have access to this at home as well, or from your office. If you just would use on the search engine, you look for Atlanta Fed GDP Now. And it's updated at maybe once a week or so. It'll be updated after important economic data comes out. And right now, the latest print is for the economy to grow 2.9% here in Q1 before slowing down, what the market expects slowing down. But the Atlanta Fed, early in the cycle, when we just begin getting data, so for example, we're just getting January data now. The Fed's model is not so great. But as the quarter progresses and more data comes in for Q1, the Atlanta Fed GDP Now rivals these surveys for who's more accurate.
Okay, great. Thanks for that, Mark. Another huge aspect of growth and success has to do with talent, which we are still hearing a ton about in this post-pandemic world. So how can companies attract and retain top talent in a competitive job market, especially considering remote work trends and changing employee expectations? Alicia, I'll start with you.
I think ultimately it's going to depend on a variety of factors, but one of the things that I keep hearing about personally and out in the market is training and development.
Okay.
I think that in this post-pandemic world where everyone was remote and people were not face-to-face,
right, I'm
not sure that it was quite conducive for the training and development that many people desire nowadays.
Okay.
So I think that is one thing that is very huge for companies, is to make sure that they have the right tools in place for their employees or associates that would like to learn more to maybe move into new roles or positions. And I think just making sure that people understand those resources are out there is very important. The other thing that I know that we deal with as well is, a hybrid work environment, remote and in the office. I think that that is very important to show the flexibility, but then also depending on the type of job that you have, if you meet with customers or it's all internal operations, there may be a need to have more in-office time versus remote or hybrid. So I think you just need to have the flexibility to understand what's the most productive for your team as well.
Okay, makes sense. Do you have anything to add to that, Mark?
No, I agree with Alicia. I mean, that the work environment is very important for employees. I mean, you think that we spend more time and weeks that with our colleagues than we do with our family. And I think that work-life balance issues, the possibility of progress, of being able to take on new responsibilities, all very important to foster and retain employees. I think it's also challenging to attract them in the first place. And there, I think it speaks to a business, what the business proposition really is, besides, of course, selling or offering a competitive service, is what kind of corporate culture is there? What am I buying into? Right. And I think that a corporate culture that is inclusive, that is, it has a wide pool of talent that it can choose from, is important. I think also, when I think about trying to create a team, I'm often looking not at sort of what the sort of superficial differences, what I want on my team, because we're always going to have problems. And the solution, it seems to me, is I want a team that it has various ways of problem solving skills.
Yeah.
So for me, that's the kind of diversity I want on a team. And I think people thrive in that kind of environment, sort of like an operating room where the anesthesiologist might not be telling the surgeon what to do, or vice versa. Sure, you need someone to maybe schedule the operation in the first place. But ultimately, you hire good people who you can trust to make the right decision.
Good advice. All right. So as we wrap up, we've covered a lot, and sometimes keeping up with the weekly economic trends can be stressful. So what are your top pieces of advice for business owners to help them navigate uncertainty and ensure that the business is successful for decades to come? So Alicia, I'll start with you on that.
So thinking back to the variety of topics we've covered, I think a couple things come to mind. Mm-hmm. One is succession planning, right? Make sure that you're having those communications. Another point that I took away from our conversation is just remembering that your client is not just your client. They are a person as well, as Mark pointed out. Getting to know them, their needs, their desires, where maybe you can help them on other aspects of their life or their business that you're not currently doing. One of the other things, and it made me think, recently we had the AT&T phone outage with cell phones, and that really made me think about business continuity planning and a workaround for how to reach your clients if there's an outage of some sort, or however you might need to communicate with them.
Great. So. Thanks, Alicia. How about you, Mark? What do you have to add?
Yeah, I mean, I kind of think that what we want from businesses, and what businesses need, is the same thing we want from individuals. In a sense. And that is the only thing I guess we could be sure of is change. Is no matter how we were doing things last week, last year, 2 years ago, if we're going to get better, we need to change. And so it seems to me that, like, evolutionary wise, it's not to the fastest or the swiftest, but to those institutions that can change and adapt to and be flexible. But at the same time, what we're talking about, both for individuals and for businesses, I think is a resilient, is everything doesn't go our way all the time. There's setbacks, whether it's higher interest rates, disrupting supply chain. We always have setbacks. And so how to like build institutions and individuals that can be resilient to these setbacks without being morally defeated. And I think those are the two things. I think the ability to embrace change, to recognize that we have to change no matter how good we are already. To be better, we need to change. And at the same time, to recognize the world is changing around us and we need to be resilient, which partly means, like some of the things we've talked about, adopting technology. Maybe not, you don't have to be the first mover, but being able to recognize the use cases for new technology. And to broadly, I think that it really the key is resilience. Being able to change without changing necessarily those core values that made you successful in the first place.
Great. Great advice and much appreciated. Alicia, Mark, thank you so much for joining us here today. Thank you.
Thank you.